Good morning, traders. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me today is Jay Jacobs. He is the Director of Research over at GlobalX, and for TradeTalks, he joins me each month as we focus on thematic ETF investing. And Jay, I would say it's appropriate this time because we're in May. It should start warming up hopefully soon in New York as we look at consumer demographics and habits with a focus on healthcare. But I first want to kick it off with MILN. It's a millennial-focused ETF.
Yeah, so we launched 3 people-focused ETFs last year on NASDAQ. So our millennial ETF, our longevity ETF, and health and wellness. And they're all focused around this idea that if you look at how consumer stocks are kind of divided these days, you see consumer staples and consumer discretionary. It's sort of looking at it from an economic sensitivity perspective. Consumer staples, think of soap. You're always going to buy soap whether the economy is good or bad. Consumer discretionary, travel stocks. If times are good, you're going to travel. If times are a little tighter, you're not going to. We're trying to look at consumers in a different way based off of changing demographics and changing consumer habits. So with the millennial ETF, where specifically, it's actually kind of combining both in a way because we see this huge demographic trend of millennials getting older, entering the workforce, making more money. They're actually set to inherit a lot of money as well. And they have really unique consumer preferences from the baby boomer generation and Gen Xers. So the way that millennials spend money is very different. And there's going to be a lot of dollars behind how they spend that money in the next few years.
Right, so with MILN, does it encompass everything from social media stocks to travel stocks? It sounds as if it's not just for millennial investors, but the trend really has been in those type of big NASDAQ-listed names that have really been driving the market overall. So it sounds like it's not just a fund for millennials, but really is reflective of how people are investing in individual names as well.
It is. I mean, millennials are somewhat trendsetters, right? So if a millennial buys something, the chances that their, uncle or parent ends up buying that down the road, definitely could be the case, right? I mean, most millennials kind of figured out social media early and, Uber and things like that very early on, and now parents are starting to adopt that.
Right.
But it is kind of spread across multiple different industries. There is social media companies in there. There's even housing companies in there, because we looked at it from the perspective of where do millennials spend money in these big categories? They're spending money on entertainment, travel, food, clothing, housing, all these very broad categories. But then within those categories, we looked for the companies that uniquely cater to millennials. Mm-hmm. So for, to be more specific, if you look within clothing, there's kind of 2 kinds of companies out there right now. There's the big box retailers and malls that are really struggling. Mm-hmm. This is sort of a 1990s approach to retail. And then you have online retail, companies that are going direct to millennials. There's actually sort of more of a value proposition there because they're cutting out the middleman. They have a really good digital platform. They maybe have a really good social media presence as well, which is sort of selling a lifestyle. We're going to go for those tech retailers, not the big brick and mortar stores that are really suffering.
That's really interesting because usually retail's lumped together into one category. I haven't really heard it much spaced out like that, and I think that's a trend that's going to continue. But let's talk about the longevity ETF. I know you can't speak about specific stocks, but that's an interesting process I'd like to hear more about.
Sure. So if millennials was sort of betting on youth, longevity is actually kind of betting on age in a way because it's looking specifically at the ways that the senior population is spending money. When you look at demographic trends, in the history of the world, it's very much been a pyramid where you have a lot of young people supporting, very few seniors. What's happening is that's turning into a cylinder. You actually have birth rates declining, so there's less young people, and people are living longer and longer. The average age is approaching 80 years now for many people. So what's happening is seniors are really spending a lot of money on healthcare service providers. They're spending money on pharmaceuticals for advanced age-related diseases. They're spending money on medical devices, walkers, wheelchairs, things like that. So it's really trying to isolate the companies that are enabling people to live longer and really thrive in those later years of their life.
All right, and the final ETF, I think it's appropriate, BFIT, B-F-I-T.
Yeah, so that's our health and wellness ETF. That is a changing consumer habit. And it's fun because these things are kind of linked together, right? People are living longer. So how does that change the way that people act in their youth and in their middle ages? We see that that's starting to change consumer habits where they're not just looking at their life as I'm healthy or I'm not healthy and have to go to a doctor. They're doing what we call health optimization. People are getting really active. They're eating better. They're trying to stay in shape even if they're not training for a marathon. They just want to generally feel good and be in good shape. So what that's doing is it's really putting a lot of emphasis behind stocks that are involved in gyms or fitness equipment or clothing and apparel related to athleisure is kind of what we call it, or even wearables. So we're looking at those specific stocks and putting them in the health and wellness ETF, because we think this trend of health optimization and people really being focused on being healthy individuals throughout their life is going to grow.
Yeah, I agree with you. I think athletes are certainly here to stay, and wearables too, of course. Well, Jay, thank you very much for joining us at the Nasdaq. We'll see you next month in June, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.